Hi, we're Sales Tax and More. Today, we'd like to discuss the taxability of the sale and installation of signs. When it comes to taxability, this is one of the toughest industries to get correct. The rules for contractors in general are complicated, especially when installing tangible personal property into real property. Signage is even more confusing because in some states, like Virginia, the sale and installation of signage is treated differently than other installations of TPP. New Jersey has just given us another example. In a new statute effective 10/1/2022, the sale and installation of signs are being removed from the definition of a capital improvement. Projects that result in a capital improvement are generally not taxable to the property owner in New Jersey. Currently, the installation of some signs are tax-exempt as a capital improvement. That is changing after 10/1/2022. After that date, the sale and installation of all signs become taxable. In a way, this simplifies taxability in New Jersey. Once you get past the confusion that the change brings, everything is taxable. However, in other states, taxability can depend on the type of sign, how it is attached to the real property, whether the signage is for a tenant or building owner, and in some states, even the order in which a sign is put together. For example, in California, if a sign is assembled on site before being attached to the real property, the labor is considered fabrication labor and is taxable. However, if the first piece of a sign is incorporated into the real property and additional pieces are added to it, the labor is not taxable. California is not the only state that taxes fabrication labor. The complexity of determining taxability for contractors, especially those installing TPP into real property, can become an issue for those contractors utilizing a software company for tax calculation. In general, software companies are not granular enough to determine all the factors that impact taxability and/or the contractors cannot or do not track all the required information across each of the states they are working in to get the taxability correct. In general, a custom process needs to be utilized, which may or may not include taxability software, to get the taxability correct. If you have questions about whether you or your clients are calculating the tax correctly, especially as you or your client are entering into new states, we have services that can help. Visit our website, salestaxandmore.com, for more information, and thanks for watching.